Hello traders, Gary Wagner here. It is approximately 11 a.m. in Honolulu, 4 o'clock in New York City. It is Thursday, the 26th day of January 2012, and this is the Daily Report for Gold and Silver. We have a nice continuation of this bullish rally as we note that all precious metals markets except palladium are higher this morning. We've got a nice showing, first of all, in gold, trading, as you can see, 1721, 1722 bid-ask spread puts it up about $10 on the day. The net change is about 0.63%. We've got a 0.44% gain in silver today, and that's trading up to 33.42, 33.52, up about 35 cents on the day. And this rally seems to be in full swing. On today's report, we will look at these markets through a couple of different eyes. Specifically, I'm going to look to do some forward forecasting based on our real minor counts within this current wave 1 in gold, and we'll see what kind of information that yields to us, all here on today's daily report. Traders, I want to start this morning's show by looking at a chart that is the catalyst for all of these latest moves in the precious metals, and that, of course, is the dollar. When the Federal Reserve came out yesterday and they made a pledge, so to speak, to keep interest rates low and to maintain the same status quo as they have, put tremendous pressure on the dollar. Dollar now on a 6-week low, and of course the dollar index is a basket of 6 other currencies that it weighs against. This, of course, is a Heikin Ashi. We haven't looked at the dollar index in this format before, but I think you'll find that it's interesting because what you can see is when this market is sideways, you get that series of alternating red, green, red, green, almost across the board. But when you have this market in a defined downtrend or a defined uptrend, it's very, very similar to what we see in gold or silver in that you get the types of candles that we're absolutely looking for. Absence of upper wicks on the down, lower wicks on the up. And when we take a look at this area right here, and this, of course, is our current area, and this is our weekly chart here, you can see that as this market came up and formed these highs here, you did get the what I call that reversal candle that we need to see. There's that doji right in here, and that, of course, was followed by this long red candle, absence of lower wick, good body size, indicates that this downtrend in the dollar, in terms of just straight strength, is absolutely in play and isn't going to go away soon. In fact, when you consider what is being said right now, the fact that the Federal Reserve is going to keep these interest rates low, they're going to keep the presses going, you have to say to yourself, this is going to put a lot of pressure on the dollar. And a lot of pressure, to me, simply means that we could see a really nice pop in gold. I think that we're going to see a lot further upside, even in the subwave. And when I'm talking about a subwave, we're going to go to our gold market chart, and this is a half-day chart. It's a 720-minute chart, and all I'm doing here is I'm looking at the subcount. This entire move that you're seeing, of course, this is all part of wave 1 right in here. And so when you consider, here's our top, we had in terms of an intermediate, we had our A, our B, and our C ended up here. And then if you recall, we had an intermediate count that was found within that itself. And so when you looked at the intermediate count, you had that 335. So you had an A, B, C, 1, 2, 3, 1, 2, 3, and then 1, 2, 3, 4, 5. In the same way, I am looking for this wave 1 right in here. This is going to be all a large wave 1, of course. but I'm looking for some sort of a subcount there. And if in fact we have seen some sort of a subcount, we could go 1, 2, 3, 4, and this would be 5. Now, that being said, the good news is we have a benchmark because we've got a completed wave 1. So all I've done on this study is I have in essence taken wave 1, begins down here, ends down here, and then I've taken a Fibonacci extension of this area here and then started it right here. Because the rule of thumb with Elliott wave forecasting, when you frontward forecast using Fibonacci, is to use 1 as your benchmark. Standard protocol, 1 and 5 equal the same. That would take us to 1756, and that's what I was talking about as a potential for this wave. However, if you take a look at the recent wave 5s that we have had, they have been substantial, and they have been really the driving force in the marketplace itself. That being said, we could easily see a 1.23% extension, 1778, or even a 1.16 would be your highest. You can get actually 2.23, but that would take us to 1818, which means that there is a distinct possibility that just on this wave, we could see the market carry 1818, 1878, 1778, or 1753. Those are 3 really strong potential targets in terms of where we could see this upside go. Now, what seems logical? Well, anything can happen in these markets, but you've got this set of tops, this is being that top of that B wave, and if we carry that over, you notice that's really lining up at 1793. So that's a pretty strong point right in here. There can be no doubt about that this could be an area that we should look at. And when you start to line these up, what you'll see is they do correspond to some pretty strong Fibonacci points. And that's why I find these studies so astutely revealing, is that these numbers tend to come up time and time again. Weekly chart, straight candlestick format. Of course, we're trading near the highs. This, of course, is 1, 2, 3, 4th week in a row, 5th week after coming off of the bottom. Very, very strong. Really, 1750 when you look at it, just in terms of no Fibonacci, so to speak, but just in terms of straight areas of support and resistance, you've got 1750 here. You've then got these highs right around 1800. Those are the 2 areas we absolutely want to look at if this market continues to trade higher. Well, what about silver? Well, on silver, you have had these dynamic moves. You see how it's trading much closer to the highs of the day. And today is a little bit out of the normal in that what we're seeing is gold outperforming in terms of percentage gain silver today. I have been on record of saying there's really no resistance up until just above $35. If you look at it this way, you've got these tops here, and you can kind of see where we're at right now. This 33.39 kind of matches these bottoms here. So in terms of historical references of where this market could stall, and then 38 here, my sentiment is on silver, we have a good opportunity to see this market run to about $35 per ounce. When we look at our daily Heikin Ashi, first of all, silver just running away with it, but look at the size of the body, lack of lower wick, very, very strong. Trend continues to move in a way that satisfies up what's my target right now, 35.31. That's our first target. And then, of course, 38. And then 40.82. These are the 3 targets which make sense. We'll see one day at a time where this market's going to take us. And then lastly, I want to simply look at the gold Heikin Ashi, and you can see dynamic move in that marketplace today. Look at the size of this body, absence of lower wick, breakout to the upside, continuation of yesterday. Of course, traders, we talked about aggressive traders. They've added their third leg onto this position. Conservative traders, we're still long at 1580. We've got some nice profits. Maintain the loose stops that you have. As I said, those loose stops are below 1650. Let's see where this market wants to go. We could be in for the ride of a lifetime. Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review as we do our weekly review. Bye-bye.